One of the most important, yet most neglected part of wealth building is this one thing that pretty much every entrepreneur, every subject matter expert, every high income professional really hates. I'm Justin Hitt with Sustainable Wealth Secrets. When you can overcome this one thing and do it consistently, you will transform your ability to create wealth. So, what is this one thing? And it's bookkeeping. If you don't know what you should be doing in a day, the very best thing you can do is to go over the numbers. It's going to be to reconcile your books. It's going to be to enter your receipts and expenses. It's going to be some of the things that I'm going to share with you here. Because if you're a top 10% earner, especially in the United States, but in any industry, if you earn in the top 10% of the economics of your area and you're not putting aside money, then how can you build wealth? Now, wealth building is starts with accumulation. And you can't have financial accumulation without free cash flow. Another strategy that we talk about is to buy assets that cash flow. How do you know it's an asset if you're not measuring? Now, I know I'm probably supposed to be paying bills right now or doing some kind of bookkeeping, and recording this podcast is a procrastination. I don't, that's probably because it came up, it's in my mind because bookkeeping is not enjoyable. So let me give you some strategies on getting this bookkeeping done because you don't need to be a financier. You don't need to be a chief financial officer of an organization. What I'm talking about here is core household bookkeeping, core cost allocations, core understanding where the money's going. Now, remember, wealth is not just financial, it's experiential, it's relationship, but we can't use those other areas as excuses to neglect knowing how much money's coming in and how much money's going out. So listen carefully. Number one, first thing you're going to do is you're going to keep track of expenses. Now, there are some clever ways to keep track of like your petty cash so that you don't have to do a lot of daily bookkeeping. So one such example, I've talked about it in my cash parking system, is that you're going to give yourself an allowance every week. So you might give yourself an allowance, the spouse may have an allowance, the kids may have an allowance, and then at the end of the week, you just basically reconcile that cash account. Now, of course, a husband and a wife partners, they can have the same cash account. But the key is at the end of each week, you sit down and say, we took $100 out for errands this week and we deposited $90. And so the difference is meals and entertainment, or the difference is general household expense. So there's a lot of cash leaks in an organization. There's a lot of cash leaks in an individual household organization. And I want you to understand something, by the way. When I say organization, your household, your family unit is an organization. You're going out and working to produce money for your family, to produce opportunity for your family. And if you don't operate that family like a business, a perpetual organization, in fact, the family business is the most basic of entrepreneurial focuses. If you don't manage it like a family business, then you'll constantly be chasing your paycheck. What I want you to do is part of the Sustainable Wealth Secrets is to get ahead of your paycheck by understanding what's coming in and where is it going out. And the cash in your pocket very often um, is a leak. Now, a lot of companies are going to tell you, well, you know what? If you use credit cards, you're going to be able to track this better with less work. And I'm going to argue against that because if you're carrying around a credit card with a $40,000 credit limit in it, or even a $5,000 credit limit, or even a $1,500 credit limit, you may make decisions that are not tailored to a decision making process and are more connected with an emotional response. And you might whip that credit card out and buy something that you really don't need. So if you got $100 in your pocket, $500 in your pocket, something like that, those will cover your basic everyday expenses. And a lot of times this is going to be your meals and entertainment. This is going to be an emergency if your car has an issue. It's going to be your tips and gratuities. Those categories. It's just easier to have a pocket full of 20s or even some tens and fives. And then at the end of the day, uh, if you are familiar with our money jar system, at the end of the day, you can take all that cash out of your pocket and drop it in the money jar. And then at the end of the week, you're going to reconcile. Now, there's some tricky little things that you can do because this bookkeeping doesn't have to be perfect. It just has to be a good representation of the money you have. And it's okay if sometimes you end up having more money than you have on your books. That's just going to happen. And one example is that the money jar, which teaches your children this money in, money out reconciliation. But if each day you have, you take $100 out at the beginning of the week, you put it in your wallet, and then at the end of each day, you take the money out, you take the change, you throw it in the money jar, and then the next day you just take the cash back out and put it in your wallet, and then go out and do your day. And then at the end of the week, you keep doing this until the end of the week. At the end of the week, you take all the cash out of the money jar, you tally it all up, reconcile your petty cash account. That's what I'm talking about. Now you're going to say an astute person is going to say, well, what about all the change? Don't count. You don't have to count the change. The change is just there. It's the dividend that you receive for for having a money jar. But it's also, if you have kids, it's also a great way for something for them to get familiar with money, to start counting the money. Um, my kid, for example, and me, we went through the coin jar. We spread it all out on the table. I like coin collecting, and we are looking at different coins. We found a 1969, Kennedy half dollar. We found a lot of cool stuff in there. We found some old wheat pennies and stuff like that. We looked them up online, and so it was a family activity type of thing. But that change, it's not worth your time to roll it all up. It's also not worth your time taking it to a change machine, but it's fun to just, you grab a handful of quarters. You need to take some comforters to the laundromat. You just grab a handful of quarters. You record it as an expense, but everything reconciles at the end of the week. It's not a big deal. Another area bookkeeping is important is setting up to have accurate and clean tax returns. Is so you're paying your everyday expenses. You're tallying them in some kind of platform like Quicken or QuickBooks, or there's a lot of platforms out there. You're going to use automation to make this a little easier. You're going to reconcile your accounts. That's great for heading off identity theft, because there have been more than a few times, and I've told you again and again, if you're making good income, there's a list somewhere that criminals will buy to target you as an individual. They're going to target you with identity theft. They're going to target you with credit card fraud. A lot of different factors. So again, reconciling your accounts. In one year, I had 5 direct attacks for identity theft. Some of it was stolen credit card, so I might have used a credit card at a gas station that was doing phishing. One of them was telemarketers calling in and asking information, which I didn't give them any information, but I do usually answer my phone. Good afternoon, this is Justin. How can I help you? Um, and so they were able to match my actual phone number, which I don't publicly give out and I don't use on things, but I do use it to verify my accounts. And so in one year, I think the worst year, I had 5 attempts with fraud. They were primarily caught because I just reconciled my credit cards, and at the end of the month, I'm looking through the transactions, and I'm like, I wasn't in Ohio staying in a hotel room. Called my credit card company, and then sometimes the credit card companies will call me. So the point is staying on top of these things will keep you ahead of problems, but as those records are layered in and they're accurate, then you can just hand that file over to the your bookkeeper or your CPA who's going to do the tax returns. You don't usually have a bookkeeper do the tax returns, but they can go through the reconciles before it goes off to the tax return. Another important factor to consider is that the financial reports that come out of these accounting systems. So it's a little bit of effort to put the transactions in the accounting system. And one of my CPAs told me, you don't have to put anything in that's under $1,500. Sometimes they'll give you a threshold of $500, $1,500, whatever. But any transaction that was under $1,500 was just kind of an end of the month reconcile. Is there money still in the account at the end of the month? And then anything that was missing, which was usually a few $100s, because I was only putting in major transactions, I would just put that to some general category. The key is that every category tied to the tax return was where we focused our effort to track. And then at the tax time, it was just print out a report. So most of these platforms have free net cash flow reports, and then you can run the report. And then if the numbers look accurate, now you can make a decision. So you didn't have to guess. See, I know people who have, they have some money, they have a couple $1 million in the bank, but they track their checking account with is there money still in the account? So I was working with this one client, and we're talking about this new business opportunity that he wants to go into. And he's got a good paying job. He's making 150,000 a year. This was a while ago. And he is um, just keeps telling me, well, there's money in the bank. It's not, the money's not a big deal. I said, well, wait a second. How much are you spending on this opportunity? Because in his particular case, his wife was getting a little upset because he's spending $500-600 a month. Now, when they have a spouse who's a little concerned about money, that could be an emotional thing based on their how they brought up or how they see money, but it could also be that they have a better picture of where the money is. And so he's spending $500-600 a month on this business opportunity. And I say, well, how much money is it making you? And he kept saying, well, it's going to make me six figures in the future. It's going to do this. He kept talking about the future. I said, no, no, right now, you pay $500 in expenses for something. Are we creating an asset, or are we creating a liability? Now, it already was kind of a liability because his wife was pissed off that he's spending the $500 and he's spending all this extra time working on this business. It's not producing any money. Well, we have to reconcile that. So again, we're going beyond money. We're reconciling the needs of the relationship. We're reconciling the desire. Why does he want to run this business? We're reconciling what is he not happy about in the position he already has that pays good money, because this business was an active income source. Well, yeah, it may have the potential for passive income, but today it's zero passive income, and it's 40 hours of your week. After you do a 40-hour job, you're already traveling all the time. No wonder your wife's upset. And so we came up with a compromise that if he wouldn't do the bookkeeping, then he was to take half the money he's spending on the business and spend it on his wife. And that way she'll be more happy, and they can discuss what they want to do together, or what the goals and desires of the family unit is. And if the business isn't making money on $500 a month, and it won't make any money on 250 a month, but you've saved half the money. You've now created a positive cash flow from what your original expenses were. Once you pay the lower amount, you're now zeroing out your free net cash flow, but your business only has to produce $250 a month. And so by lowering the cost that he put into the business, he was able to hit his numbers faster and break even. Because he's spending more time with his spouse, he's able to communicate that. Now he's still spending $500 a month, but ultimately his wife is happy. He's spending more time with the kids. He's breaking even on the business. The spouse is now positive about what the business is doing and starts seeing the potential of the business, joins him, and then now it became like another $5,000 a month or something like that. It was just, it was a transformation, not in working the business harder or squeezing out the next opportunity. It was, where are we allocating our time and attention for the maximum value now? Now, if the business was rolling money over, I would not have recommended him to neglect his wife and his children in order to make the business work, because if they don't understand how the business is helping the family unit, then the, the spouse could sabotage the business. The kids could grow up and be more trouble than they would be otherwise. It's easier to raise a good kid than it is to fix a bad adult. But this is the reconciliation and bookkeeping that I'm talking about. It's not necessarily putting on your little accounting hat and sharpening up all your pencils and going through things. It's paying your bills on time. It's managing your debt. And we didn't have time to talk about that today, but in the debt management strategy, there's ways that you could actually reduce debt faster through bookkeeping. The bookkeeping elements of being able to just generate a report rather than guessing. A lot of folks that tell me that there are plenty of money in the bank account don't tell me about the transactions they're taking out of their savings or their reserve accounts, because the bank account gets too low. So it's not like they got a month and a half in expenses in their bank account, and every deposit makes it so they got to take money from their checking and put it in their investments. No, no, they can't put any money in their investments, and they're slowly drawing from their investments because they're only measuring by a weak measure of, is there money in the checking account. See, that's the whole mentality that even high income professionals have, of living paycheck to paycheck. Will I get enough money in this next check in order to cover the things I've already spent on? Bookkeeping and reconciling gets you ahead of that. It really gets you in a habit to measure, a habit to accumulate, a habit to understand, and a habit to strategy to have a strategy. So the last point I want to give you, and I hope I shared it in the example, is that we're gonna do the general bookkeeping, and we're gonna know our positive net cash flow overall, but we're also going to break it down into projects. So this gentleman he had his full-time job that was generating income. He had a side business that was generating income, and he had household expenses. If we break those things down into individual projects or individual groups, we can now understand, is the job a free net cash flow? Now, definitely his job was free net cash flow. He made a lot of money. However, the job kept him away from home. And the reason he was starting a business was to be at home more. The job itself was highly stressful and didn't get a lot of sleep doing the job, and ultimately it was extremely challenging. The organization that he was working for, as well as in the industry, was having financial problems. So measuring that standalone can help you see why you might be doing other things, but it can also give you an idea of how much net cash flow you need to recover to to leave that position. And so again, the frustration, the stress, and everything that he had unreconciled was leading to running a business that wasn't profitable, and so he was actually getting in a worse off situation because he was neglecting his family. And so by readjusting that, we were able to look at the business as a standalone. We were able to look at the family as a standalone. And by the way, um, the the relationship with the wife is much cheaper than a divorce. So he stands to lose half of everything with a divorce and not be able to see his kid and not be able to do the stuff that he wants to do. And after all, he was working for the family in the first place. He was killing himself for his family that was being done in a way that took him away from his family. So again, this bookkeeping is financial, this bookkeeping is emotional, maybe you do some journaling, and this bookkeeping is strategic to understand of what you're doing, which items are profitable, which are building assets that cash flow. Now, if you have any questions about what I've covered today, be sure to visit www.sustainablewealthsecrets.com. I'm Justin Hitt, and one of the things that I want to make sure you understand is that there's a lot of marketing that's teaching you to do things that are counterproductive to wealth. That's one of the reasons that the majority of the population is broke. Very often people struggle. Even people in the top 10% of the incomes struggle. And so I want to make sure you have the fundamental skills. The fundamental skills come through the questions you ask. So by asking questions, whether it's asking questions on the podcast, on one of our live events, or by visiting the website and going to the contact page, you're going to have an influence on the topics that I cover so that you get things that you can use, actionable things that you can use. And so that's the key of why we're here. Bookkeeping is the most functional and accurate thing you can do right now to move towards wealth. It reduces the risk of theft. It increases your understanding of what actually is going on with your money. And that's what it's about. That's how we build sustainability. That's how we turn your income into net worth. Be sure to like and subscribe, and I'll see you on the next podcast.